Welcome to today's market report.
The dollar rose on Friday, but a gauge of global stocks retreated on a report that showed U.S. consumer sentiment slumped to a 6-month low in May, reinforcing bearish investor sentiment over talks to raise the U.S. government's debt ceiling. The dollar strengthened against the euro, yen, and other currencies as it rose 1.4% for the week, its biggest weekly gain since September, as concerns about the government's borrowing cap and the Federal Reserve monetary policy prompted a shift to safe havens. The Congressional Budget Office warned on Friday that the U.S. faced a significant risk of defaulting on payment obligations within the first 2 weeks of June without raising the government's $31.4 trillion debt ceiling, adding that payment operations will remain uncertain throughout May. U.S. consumer sentiment slumped to a 6-month low in May on worries that political haggling over raising the borrowing cap could trigger a recession. The dollar index, a measure of the greenback against the 6 other major currencies, rose 0.59% on a day as oil prices slid for the 4th straight week. Longer-dated Treasury yields were on track to end the week lower too, though the yield on benchmark 10-year notes was up to 3.464% on bets the Fed will stop hiking rates at its next meeting in June. MSCI's US-centric gauge of stocks across the globe closed down 0.26%, but the Pan-European Stock 600 index rose 0.4% after upbeat results from Richmond underscored strength in luxury sector. The Dow Jones was down 0.03%, the S&P fell 0.16%, and the Nasdaq lost 0.35%. Investors will scrutinize US data for rate clues next week, with retail sales and industrial production figures. The pound was down 0.45% on the day and has fallen from a high of 125.40 to 124.48. Euro dollar is at 108.50. This is today's market report. Thanks for listening. We'll see you next time.